Understanding trends, hotspots, staying ahead of the market is one of the key things you need to understand as an investor that helps you stay ahead. It helps you get exponential profits while the rest of the market only gets the market profits, right? So if that's what you're looking for, you need to listen to this video and implement the strategies that I have in place to help you get ahead of the market. Now, there's 10 different trends and markets that's about to come in 2025. Now, some of them will be relevant to you as a first-time investor. Sometimes will be relevant to you as a long-term or as a sophisticated investor. Whatever it is, all of these trends are going to set you up for the next 10 years. So if you do it right, then that means you're going to be profiting from it again and again and again. And that's really what it's about when you're looking at investing, not only in property, but anything else. My name is Helen Tarrant. I help everyday Australians become wealthy through investing in commercial property. And today I'm going to share with you the trends, the hotspots, the inspections, what to look for, what not to buy in this video. So let's get started. So I've taken this 10 trends from a real commercial real estate article. It is called What to Expect from Commercial Property Sector in 2025. Now, I'm going to list out the 10 different predictions and quickly go through for you what I see as a strategy against each of the 10 trends that they've given, right? So it's good enough to talk about it, but they don't actually give you what you should do. So number one, they say that economy recovery as rates cut loom. Now they talk about how with the rate cuts, people are a little bit more in tune to buying again. They're talking about investor confidence. Now what I think this will mean is that it will mean that there's more and more tenants that are willing to sign longer leases. That means the value of the properties are going to become much more secure, and which means the value will go up, right? So the market loves security, right? Especially with your first time investors, you love security. And that means that when you see that there's longer leases being signed because there's more confidence of recovery, more confidence of profits, more of the supply chain coming back, that means that your tenants are willing to stay longer, rents are more stable. It means that you want to invest more. So there's going to be on-flowing investor activities. But this is a good opportunity if you're looking at switching tenants that's been there for a long time, that on short leases into longer leases. So number two is commercial properties return to growth state. It means that core, and also really interesting way, it says Sydney CBD properties are on the rise in terms of coming back in terms of its increase in value, which is really interesting because I've been predicting for a long time that property, especially in the office space sector, will come back, but it'll take quite a few years because at some point industrial, people realize they're overpaying for industrial, they want to buy something else, right? And it's really the only other two is retail or office space. Now retail will make a comeback this year, but office spaces, especially in key locations where people realize it's not really going to be outbuilt again, right? When you're in Sydney CBD, those areas are not going to be outbuilt again, right? Not going to be built again. So therefore, why would you not invest in those areas, right? So if I had the money, I would invest in those areas. It's something that we say around in our office all the time for our investors, is that if we were not committed elsewhere, we would invest in something like that. And it might be a speculative purchase, but in the next couple of years, it will pay off. So number three is about investors ready to re-enter the market. Now, we already know this. That means there's going to be a surge, especially when interest rate cuts. I reckon it's 2 interest rate cuts before everybody surges back into the market wanting to buy again. And it's purely because people want to buy again into this market because they know that they're going to get instant cash flow. Previously, when the interest rate was high, you couldn't get instant cash flow. But right now, it looks like you will get instant cash flow with the rate coming down. And if you play the yield game, which is the cash flow game, you know that if you buy in right now, it might be neutral, a little bit negative. The moment you have a couple of rate cuts, you've got cash flow in your hands and you've got growth in the back end as well because more people are buying in, so the demand actually goes up as well, right? So number four is that office leasing is back, but only on the top end. So if you get high-end properties in good locations and you do a fantastic fit out, there's going to be a demand. There's always going to be those high-quality tenants, whether they're coming from overseas, whether they're your KPMGs or your like top-tiered firms that really want a great fit out, want a presence, want their people to work in those offices that have a bit of a lifestyle with a great view. They're always going to be in demand, and you should be chasing after that or maybe a slightly older version of that, refurbishing it for a potential tenant to come in that could pay a better price than the market, right? But if you're looking at secondary stock, this is where it's going to still be challenging for the next couple of years. So really do pick your stock. And again, this is coming back to using professional organizations like us here at Unicorn, who help everyday Australians become wealthy through commercial property investment. We're a specialist buyer's agent, education, we do syndication, group deals, and what else we do is we help you from beginning to end in your wealth journey. So do click in below, booking for that strategy session, or join one of our upcoming events as well. Now, number 5, data logistics drive the industrial sector. That's really interesting because I've been saying since like the last year or so that data centers, even though people dismiss them as, oh, there's one locally, they're kind of dismissing them as like self-storage. Like, oh, there was one locally, we don't need one in another 5 or 20, or we only have them in the outskirts of the city. The thing is, there's very limited buildings that can host data centers, right? They're buildings that are really solid in areas that are not interrupted by anything else. So your flight path, your contaminations, or your or areas where you've got a lot of, I guess, environmental hazards or noises, those things aren't suitable for data centers. Data centers are things that are now well locked down, well preserved, have heavy flooring that can cope with it. Like, there's very specialized buildings that can deal with it, right? And we've had an upsurge of over 20% of the need for it, but there's not enough stock that is purposely built for it. So when you get industrial warehouses or even office spaces that can be repurposed for it, doesn't matter if it's in the city or in the regional areas, they are people that are in demand. There are a lot of companies out there looking for that. So do look out for that. And in fact, one of our latest syndications have a property that can be repurposed to a data center in the future and can be built on that land. And it suits this really well. So if you want to find out more, make sure you book in or reach out to us, right? So retail to return, number 6 is the thing on the list, retail to return. Now, so because industrial people think they're overpaying for industrial now, or they're just not breaking even, especially on their small industrial stuff, they can come into retail. Now, retail, they're going to be looking at, your little shop fronts and shopping strips. They are going to take precedent. And that's what it means is if you bought 6% last year anywhere, well done. If you bought 6.5% in Metro last year, congratulations, you've done well. In the next 12 months, we're going to see a significant change in terms of the returns. Returns in retail is going to go down, the value is going to go up, which means you have a chance, if you bought in the last 12 months, to go again. Now, we've been putting clients into retail properties in the last 12 to 18 months because we knew this trend was coming. One of the key things about being with the Unicorn team and the Unicorn community here is that I'm at the coalface of everything. So I'm still doing deals, I'm still talking to clients. Unlike so many other buyer's agents who are removed from the process, I need to have my finger on the pulse. And it's so important because that means I can predict trends, right? To predict trends, I can lead a community, which means I can get you ahead of the market. And if you're looking at getting ahead of the market, that's why you should join one of our upcoming events. We've got an event on the 23rd of March that is coming up. That is an overall event. If you're starting from beginner, we've got the first 3 hours for you. If you're looking at market dissection, we've got the last 2 hours for you. It's a 5-hour event with us here with myself and my team, and we're going to take you through commercial property 2025, how you should shift your thinking, where you should be investing, and where are the gold mines in 2025. So make sure you join our event. The link below to register as well, okay? So number 7, mid-market key to build to rent success. Now, that doesn't really work as much for commercial as it is for residential. So if you're a developer, consider a built for rent, but built for rent could also go with 2 ways. One way is that you take something that is commercial, repurpose it to residential. Now, you realize that when you repurpose it to residential, a lot of these places are not going to have your car parking spots or your amenities that you would have for residential, but it's going to be close to transportation. They can walk to a park, they can walk to other leisure activities. It's going to be very central. So a lot of the office buildings could be repurposed to built for rent. So for example, areas like St Kilda, areas that's really close to a station in around the Sydney or fringe CBD areas, those work really, really well because they have lifestyle plus access to the CBD. People are working in there. A lot of them are going to be a transit population, people who are temporary visas or people who are just arrived in Australia. But guess what? It doesn't really matter because these people don't need a car, they don't need a lot, they just need somewhere to get started, and probably great for student accommodation. And you can charge a premium by having areas where people can work and socialize together as well. So that is upcoming, and if you're a developer, to look out for that conversion. Number 8, focus on sustainability report standards. Now, this is talking about emissions and everything else. Now, everybody with the big companies, if you're looking at going that way, so you're 5-10 mil in terms of investments, then what you're looking at is these are really important for green buildings, and they're really important because your clients who your tenants are going to want that because it looks really good on their reporting, looks good on their sustainability, looks really good when they're doing these projects and everything else, that they're in a green building. That building might actually have, solar, might be using green materials, might be really updated with, and it might have charging stations. All of those things matter when you're in that bigger space. In the smaller spaces, they matter less because you're dealing with mum and dad tenants and dealing with tenants who just really want to make a lot of profit, or tenants who are being there for the long term and their business is chugging along quite well, so these things don't matter as much. But if you're at the high end of town, this is absolutely something that matters as well. So we're almost there. Number 9 is tackling cost pressures, energy security, and drive decarbonization efforts. Now, again, this applies to the big end of town, but the pressure of cost minimization for your tenant is become so important now because everything's on the rise. Like, we can see that things have changed by 50% in terms of our everyday amenities, your bread, your travel, just going to entertainment, to what wages are, to how much it costs to rent a premise. Your tenants are acutely aware of this, right? So therefore, they are wanting to know that how you can minimize it, and that might be solar then in cold storage. That may be the fact that they already have a fit out in place. So let's say you've got a commercial kitchen. It might be that you have an alfresco dining, a mezzanine floor. It may be that you have things that are convenient for your tenants, right? You might have things that's already installed in your property that makes it ease of use, that saves them money in that process. So really look at that when you're either doing an uplift to refurbish a property, or when you're taking over a property, or when a tenant is leaving, how much fit out they should be stripping out. Now, finally, focus on risk mitigation, which is what we talked about previously about cost. This is risk. This is for you as an investor. Risk mitigation, meaning that what can you do with that premise? Like, it talks about, the sale potential of obsolete assets, right? But it's really interesting here because it talks about across real estate spectrum, people don't want to buy assets that's obsolete. Now, there's lots and lots of man caves out there that are not being rented out, and they have a more residential feel than they're commercial. So they're probably, in time, people are going to realize it's not really the demand of the market. So look at the demand of the market, look at where the population demographics are going. But one of the big key things about it is looking at things that can be repurposed. Versatility has come out of COVID as one big thing, being able to repurpose your actual property from like a dentist to a hairdresser to a restaurant becomes so paramountly important, so it doesn't become obsolete. Because let's face it, with AI, technology, software, all of this coming up, you don't know what the demand of the customer will be in 10, 15 years from now. So long-term investment, got to think agile, got to think what we can use in the future and how we can maximize the profitability of your premise but mitigate the risks. Now, if you want a full blueprint of how you can achieve that, how you can get to financial success from beginning to end, where I have developed a proprietary system where I can actually take you from now where you are to where you want to be in a set amount of years, giving your goals and taking into account what you need. It's very specialized, it's proprietary, and it comes from being with clients and investors over thousands and tens of thousands of hours distilling this information. If you want that and you want your blueprint, book in for that free strategy session and let me and the Unicorn team help you build wealth through commercial property, and let us get you to financial freedom in half the time you would in residential. If you liked it, click the subscribe button, hit the bell, and I'll see you in the next video. Bye for now.